Earnings Insight. I'm Abigail Doolittle. Joining me from the Steve-O in Chicago is Scott Bauer of Prosper Trading Academy. As always, Scott, thanks for taking the time to join us. And our conversations each week have been getting progressively more interesting because we have something to talk about. The markets are really moving. So, we had 2 down weeks, the worst weeks of the year. That big down Monday, yesterday a rally, today small losses. What do you think is next?
I think we're going to get more volatility. Now, I'm not saying we're going to get the extremes that we've seen, VIX up to 21, down to 12, but I think we're going to have these gyrations at least through the middle of June or the next time that Trump and Xi meet. There's no reason we wouldn't get that. I mean, Fed is still always in play, but, until there's more clarity on the tariff issue, I would expect some volatility.
So, what's so interesting, Scott, is the fact that we've had these relatively big stock market moves. Yesterday, the NASDAQ 100 had its 7th 1% or greater move in a row. The VIX, though, really not moving. So what's the disconnect between these outsized moves for stocks, but the VIX not really doing much? Or VIX investors are just not that concerned?
Yeah,
should we be concerned about
that? Well, we should, but I think that tells you the overall retail sentiment believes that, A, there's probably going to be a deal coming in the next 3-6 weeks, something like that. There's also the summer months coming up. You have to remember that. So even though we have plenty of risk headlines and there's, a lot to be concerned about, summer months coming up usually means depressed volatility, and the VIX is certainly reflecting that.
Well, one place there has not been depressed volatility, the retail sector. Lots of stocks getting hit from Home Depot to Lowe's. It's pretty amazing. Nordstrom. So you have a trade actually on Foot Locker. Talk to us about that.
Yes. Yeah, and I always like to stick my neck out ahead of earnings, and earnings are Friday morning. And, I actually like Foot Locker a lot here. Technically, if you look at the 200-day moving average, it's right here, 54. That has been just some major support. I'm buying next week's 56.60 call spread, $4 wide. I can do that for about $1.25 or somewhere in that range, and that's great reward to risk. I think they're going to have
Scott Bauer. We've got to leave it there.
Guidance is going to be really good.
And gutsy trading call right ahead of their earnings report from New York. This is Bloomberg.